We think that the US inflation situation is improving. After having seen high inflation, we expect that this inflation trend will continue in the coming months. That would mean that the US Federal Reserve would have the window to start considering pausing interest rate hikes, as well as considering potentially cutting interest rates should the economy start to slow down even further. So that itself would mean that the dollar will likely weaken slightly from here as investors start to seek some of the investments outside of US. For the Asian fixed income side, we believe the Asian hard currency bonds were likely to do better. That's because of the denomination of hard currency bonds in Asia is in US dollars, so that will benefit from that, plus also the fact that the US interest rates are expected to head lower. On the Asian local currency bond side, it will be complicated by the currency outlook, plus also the local bond yields movements. On the local currency side, we may expect a slight appreciation of Asian currency versus US dollar. And on the local currency bond yields, we may expect some of the central banks to ease rates a little bit further, given the inflation profile of Asian countries are very benign. I think for the Chinese economy, the main challenge for them right now is to address some of the property sector weakness, how they deal with the problems and how they resolve it. I think this will be key to investors to gain their confidence, as well as for the other market participants such as the consumer side, for them to continue to increase the spending. I think China needs to do more, not just on the property sector side, but also on the bigger macroeconomy picture to really improve the consumption, the income levels, especially on the job sector side as well. So I think that itself would be a key focus I think the authorities will have to pay attention to.